Hello, YouTube. The NASDAQ has stopped going up because we are going to be cracking our short-term one-day uptrend. The NASDAQ is down and the S&P is up. So we're likely going to get a dip here on the NASDAQ, and we want to ask ourselves whether or not this dip is for buying or if this time is different and maybe we're going to get a little bit more. This is important because what used to be resistance, talking back here to the gap we have here in September, is now acting as support, at least for now. We have a higher high and a higher low, but we cannot forget that this level is also really important because if we look back to 2 weeks ago, after our mega foam pattern or three back-to-back engulfing candles, if we fall back below 309, which is our high here, that means we could be going back down to our weekly low, if not back down even further. And we laid this all out on the weekend. So we're going to look here to QQQ. We're going to look at SPY in a moment. But first of all, what was the headlines that drove the news today? Then we'll come back and look at everything else. So we're still in fear. And as that fear manifested, we saw that the FDIC says First Citizens Bank has reached a deal to purchase Silicon Valley Bank. So banks are up and tech is down. We look here to Fed's Barr, who's going to be giving testimony tomorrow, calls Silicon Valley Bank failure a textbook case of mismanagement. He's going to be up tomorrow. So what happened? Well, tech is down, financials are up. It's not really that clear what the theme is here today, though, right? It's a whole bunch of nothing. And with low volume and a small range on the day, things are starting to stabilize, believe it or not. And this will be very interesting because on Friday, we close out the weekly, the monthly, and the quarter. Why does that matter? Well, because normally, if we look here into the month of March, and let's pop over here to the SPY. So let's go to SPY. Let's look at a 1 month. And I was making a joke about this before I hit record. We're currently up by 23 cents on SPY, or 0.06%, which means a whole bunch of nothing. Up in January, down in February, and flat into March. Yep, there you go, right? Flat, down, back up to where we started. So are we going to get that sell in May and go away and come back on Labor Day? Or have we already pulled forward a lot of the gains so far this year? We look to a 12-month chart, and we note that right now we are currently up by 3.68%. To get to that 4% threshold, we usually have to be into June or July. So this time's different, as we all know. Let's get through the rest of the headlines and we'll look at some charts. Here we go. Binance and its CEO sued by CFTC over U.S. regulatory violations. This is the largest crypto exchange in the world. So what's going to happen here? Well, crypto is down, and we're going to look at that in a moment. Morgan Stanley's Wilson, earnings are the next risk to equities. And the earnings season is going to be kicking off fairly soon, with banks actually leading the charge. Given the events of the past few weeks, we think guidance is looking more and more unrealistic, and equity markets are at greater risk of pricing in much lower estimates ahead of the hard data changes. He's a big bear. We also heard from Jeff Gumlock today, and he's saying that the chances we are done with hikes is better than 50-50. He also tells us that I believe the recession will begin in a few months. The Fed should have raised rates more quickly than it did. A couple more headlines here. He tells us that I think the Fed will cut rates a few times this year. Okay. The Fed will not raise rates until the 2-year note goes back up. So I want to look at a few things here. First of all, is just that at the end of the week, we're going to be closing out Q1, and we're going to get a print for GDP for Q1. And then we're going to be looking forward to Q2. And again, we're here at 3%. The new month is going to be kicking off next week. So that's the first thing that he said. The second thing he said is that the Fed should have raised rates faster. Yep, there you go. I believe the recession will begin in a few months. We just went through that one. The chances we are done with hikes is better than 50-50. And then he talks about here how the Fed will cut rates a few times this year. So the question is whether or not we should be cheering for a Fed pivot, not just a pause. So there he's talking about the pause. If we're going to be getting a pivot, it usually happens after the system is not only breaking, but it is broken. And the Fed pivot means that we're taking the Fed funds rate down dramatically, like in the 70s, the 1990s, the 2000s, and the 2018 period. So that means it's not looking all that great if we actually see cuts. The recession is coming, and it could be an avalanche. So those are the headlines from Jeff Gumlock. Fed's Barr to reassure Congress on sound and resilient banks. Again, he's going to be giving a 2-day testimony starting tomorrow in front of the Senate, in front of the House, over 2 days, just like Powell did 2 weeks ago. So he's going to definitely be grilled. He's going to be there to try to reassure the market, reassure Congress, and I also think he's going to be focusing on crypto. We noticed those headlines on CZ, and he's in charge of that exact same thing. Here is something that is also very interesting. Alibaba founder Jack Ma back in China after months abroad and signed Beijing may be warming up to tech. Why? Their economy is likely not going to grow very much this year, which means Beijing borrows at fastest pace on record. That's right, on record. Beijing accelerates debt building. China Central Bank government's net bond financing biggest on record. Why? Being locked down for a couple of years means their economy is not doing so hot. And with an aging population, China doesn't look as good as they did before. So, all right, with all of that in mind, we're going to go through some charts now. I'm going to ask you a favor, one time only. If you could please consider smashing that thumbs up and subscribing to the channel if you're enjoying the content. Let's jump right in. So where I want to start is by looking here at the one-day chart. And we noted that QQQ is actually the one that has been driving the market higher. So if tech is down, what is up? Because we're seeing a rotation. And I think it's important to note that area, as I noted on the onset of the video, at about 308, 309. If we look over here to SPY, we actually have a gap fill. So it gapped up today. It came down, filled the gap, bounced up. It's filled the gap. That's good. We made progress here towards the 50. That's good. We have a short-term head and shoulders pattern. That's bearish. We're below our bear market downtrend. That's bullish. So like there's some evidence for both teams right now. And when we look to the volume to confirm, this kind of looks like capitulation here where we have a big flush of volume. We hit our low and then we rally back up on low volume. So I would call that a dead cat bounce so far. Why? Because we're not really advancing quite yet. If we go here to hollow candles, we note that it's been an expansionary territory, but it's still a dead cat bounce because we have to make new highs, and we've not quite done that yet. If we go here to our weekly chart, what we have to do is basically get above 403, and then we got to get above 405 and even higher. Why? Because tech is already there. It's already powered up massively over its megaphone. So remember, the S&P includes tech, financials, industrials, banks, all that good jazz. So if we're going to get not just a dead cat bounce, we are currently, we got 2 weeks where we got higher highs, 3 weeks with higher lows. We're over our 50 weekly again, but we are not actually breaking that megaphone. Again, the megaphone here is for the 4 weeks. We have to get above 408 to really do that. And then if we're able to rally to 408 and then also make it to 418, that is where the S&P can birth a new bull market. So if we understand the stakes are high right now, we're currently getting a push-pull between the 200 DMA and the 50 DMA. What actually moved? So dollars down. If we look down here to XLF, let's look at XLF. So XLF is up by 1.4%. Yep. So that's why tech is down, but the S&P is up because we're seeing a dead cat bounce inside of here. Why? Well, we told you that Silicon Valley Bank is getting bought out for $500 million. We can look down here to IAT and IAK as well. And this is where what we noted on the weekend was that this is a chart that I think a lot of people should be looking at. You can also look at KRE. So KRE, Regional Bank ETF. Whoops, I got terrible handwriting. Sorry. So I'm looking at IAT just because that's the one I want to look at. We look at hollow candles and we note that, well, it appears like every rip is for selling. Dips are not for buying. Rips are for selling. It was a sell on the 14th. It was a sell on the 22nd. And it was a sell again today. So if we fill this gap down here to roughly 34.4, I want to see if we bounce like the S&P, or I want to see if we fail and go back lower. I think it's likely going to move on Barr's comments from the Fed tomorrow. So those two are really important. Then we got IAT here. Again, this is insurance, and it actually managed to close out with a doji, but there is heavy sell volume. We look on a 1 hour chart, and we note that, yeah, they sold it off pretty hard. So it closed green, but man, the sellers were there. They met the buyers today, and they flushed it. A few other things to look at. Well, we note that China's down. So, right, big gap up into Thursday, Friday, gapping down today. This chart is just really gappy. There's gaps everywhere. It's an ugly chart, and maybe the country's not doing all that hot. So there you go. Looking forward to a few more charts here that are really important. SMH is down, which means chips are also down. The saying is that chips lead tech, tech lead SPY. This is not looking toppy yet, but if we start to lose these tops right here, we have a lower low and a lower high, and we know that NVIDIA has been on a monster tear lately, so sideways could add pressure. All right, last ones here for us to look at are going to be very important. So we note that gold, right? Gold is actually down, which means that people are feeling less of a need to hedge. But on that CZ headline, we actually note that gold has been rising off its low of the day. So they cut it in the morning, and then it rallied up for a large part of the day here on the hour. We look to Bitcoin. not the same story, right? It's starting to fizzle. Inside Barr, starting to break Bear. We're down by 3.5% on the day for Bitcoin, and we're down by 4% for Ether. So, right, lower high, lower low, below yesterday's low. Doesn't look all that good. So we note that there is definitely still some appetite for risk aversion, but it's not quite in the areas you would expect it. Looking here to oil, oil had a big move higher. So again, this is telling me that people think that the banking crisis might be over, and they're currently bidding up things which would mean expansionary territory for the global economy. Last things to look at here are going to be the 2-year note and the 4-year note, because these also scream a story to me. 2-year note above 4. The 10-year note is above 3.5. So Jeff Gundlach said that the Fed's not going to keep hiking rates until the 2-year yield rises. Well, it's up from about 3.5 to 4. That's about a 10% rally off the low. Why does this matter? Well, here's what I think. And again, I could be totally wrong, but I believe that financials up, tech down, and we note that yields are up, gold down, and Bitcoin down tells me that the reason why we were selling off for the last few weeks is starting to unwind. And it looks like the Fed is going to be able to refocus on its inflation fight. And that might be a critical error, as Jeff Gundlach just told us. So if you want to watch more in regards to how we got ready for this week, there should now be a video queued up here on the left-hand side. If not, thank you so much for watching, and I look forward to seeing you tomorrow. Thank you again.